Hi there. Good morning. Thanks so much for tuning into the trade setup. I'm Neeraj Shah. The the U.S. markets, of course, were not functioning. They were closed for Labor Day yesterday, so we don't have cues from the U.S. markets, but the futures, as they stand, are flattish to marginal in the green, but nothing untoward from the global markets. If that's the limited point I'm making, I wonder if we can actually pull up a chart from one of the Bloomberg's gadfly stories about how I mean, they're talking about a US senator who has said that the US economy is overheating, and how the chart actually shows that the US economy is not overheating, if you will. So this is a city research chart. It's something that I was talking about yesterday. And if you can see this, it tells you how the current economic growth estimates have actually dropped as the pandemic lingers in the US. It's very, very close to almost, actually, it's below the lowest level in the last few months. So that tells you a story about how the US economy is not overheating, and how there is ammo for the Fed to not go out and do any tinkering with the rates or the taper if they want to do it that way. So just thought it was an interesting story. You might want to read it. Asia and the SGX Nifty will come up on your screen. As I said, the US markets are no cues, but the futures are indicating a mild positive. So we might have a start which is flattish in nature. Sure enough, Nikkei has a percent kind of a green, but the others are a quarter of a percent here or there. The SGX Nifty will come up on your screen next, and I reckon that too should have a start which is flattish, maybe marginally lower, who knows. But there's a bit of an undercurrent in the Indian markets, and that might just keep it in the green. Yeah, so flattish start anticipated. Remember, the SGX Nifty technically means nothing per se for the rest of the day, but sure enough, for the start, it's not a bad option to look at. The MOE function gives us a sense of how the market breadth was yesterday. And frankly, it was Reliance and Infi which led the market higher. Otherwise, it was even Stevens. And I think the market breadth shows that, yes, 255 advances to 240 decliners. So it was almost even Stevens at the broader end of the spectrum. It was only that in the large cap and you had Reliance and Infosys doing well. But yes, sure enough, there were a bunch of stocks which moved really well. Real estate continued to remain in flavor with Prestige, Opera Realty, Brigade Enterprises, Soba, all of them doing really well for themselves. You now seeing a definitive tilt towards the southern-based real estate companies which are starting to do very well. So keep them at the back of your mind. There was some strength in IndiaMart, and actually I was going to say today that the platform companies are starting to do well, but IndiaMart has started to do well since yesterday itself. But a lot of these are starting to do really well for themselves. On the flip side, there was some bit of corrective move in some of the equity-linked companies and the NBFCs, but let's wait and watch if that's a limited point of move or no. So frankly, the trade setup, I think, from whatever little I read, and I read 3 notes yesterday from fairly decent technical experts, and they all seem to believe that 17,300 and 330, and not that range, but what effectively between 17,300 and 17,330, that seems to be a key support zone for the Nifty. And as long as it holds on to that, the bullish bets are not gone. I mean, Reliance, we all know, is on a song. It's actually doing really well. It's gained about 15% in the last 5 sessions. But now for the index to move higher, if the index were to move higher, Reliance needs support. Doubt that Reliance can do it single-handedly in the current uptick. After this uptick, after this run-up that we've seen, yes, until the Geo Next phone launch, Reliance will remain active. But for it to move up further and take the Nifty higher, banks need to participate. I think NBFCs are still strong. And like I said, maybe I'm a day late, but I thought I heard, I spoke, and that everybody seems to be preferring these platform businesses. Turn by turn, some of these are doing well. We had some of the exchange names like BSE, IEX, etc. do well recently. Now we had India Art Intermesh come up yesterday. JD Mart or Just Dial has already done well after the UBS upgrade. Do watch out. There could be a leg up into these stocks as well very, very shortly. So in light of all of this, because it's an inconclusive day from a Nifty perspective, what about specific stocks? Because they'll dominate trade. So let's talk about those. Dish TV, it's a small 13 rupee stock, but I'm just bringing it because it's important that Yes Bank, it holds about 25% stake, has sought the removal of 5 directors, including Jawahar Goel. And that's a big thing. And there are a series of allegations that Yes Bank has filed, which is saying that the board and whatever the company tried to reduce the role of Yes Bank, so on and so forth. They have filed this petition that's pretty interesting. I wouldn't be surprised if Dish TV, which was up about 5% yesterday, has some wrinkles today. Let's wait and watch. I thought Cochin Shipyard is a really interesting stock, and the announcement that they've done, they've emerged as the lowest bidder for a 6-vessel tender from the Indian Navy. This tender for next generation missile vehicles is worth about 10,000 crores. That's large. And the CMD said that the formal contract signing is expected shortly. Viewers, remember the last few days I've been talking about this, that every second day or third day, you're hearing a defense name getting a large order, and these orders are real and tangible, right? And more importantly, it is showing that there is intent on the part of the government to give out defense orders. Zen Technologies, it's a small cap or a micro cap stock, some 10 days ago came out with an announcement that the order book has doubled. The stock was at 100 rupees. Then in about 10 days or 15 days, it's at 180 rupees. That's a number better than Reliance Industries. Oh, thank you so much, Virat, for pulling that up. But just look at the chart. That tells you a story about defense orders being out there which are tangible in nature. You have to watch out for this space. It is getting orders, and the stocks are moving, and shareholders are getting rewarded. Don't be dismissive about defense. That's the point I'm trying to make. So, but watch out for Cochin Shipyard today. Again, I'm not saying that Cochin Shipyard will have a run up like Zen Technologies, but the order win seems to be pretty impressive. So, do watch out for that. There's a WhatsApp forward on Nalco. Please, viewers, be careful. Verify the news before you try and do anything about it. So, we're not bringing it up, but keep in mind there's a WhatsApp forward on Nalco about Vedanta looking to acquire stake. Nalco is anyways in a bit of an up move thanks to alumina prices because of the coup in Guinea. But please be careful if you believe into certain messages. Verify them is all I'm saying. It may well be right, but please verify before you try and trade. Some other stocks to monitor today. Edelweiss, there's a 400 crore public issue which is oversubscribed. NCD issue which is oversubscribed. I must tell you, this is a routine exercise for any NBFC, so not a big thing. I'm bringing it up to tell you that it's not a dramatically big thing for Edelweiss. Just keep that at the back of your mind. Nuvoco Vistas, the reported PAT was up 3 times at some 117 crores versus some 37 crores. Pretty impressive. So do watch out for this one. BPCL, Fitch rating says there could be delays in privatization. Watch out for that. Maruti Suzuki, they've increased the prices of the entire production range. So that's an interesting one. And some brokerage calls for all of us. So CONCOR is impressive. I think both Jefferies as well as Antique Stock Broking, at least 2 notes that I saw, have come out with a note after their annual report got released. So it's an annual report analysis. Jefferies says the rating is a buy and the target price has been raised to 870. They say that DFC and the last mile connectivity and working on new growth opportunities have been highlighted in the annual report. Jefferies believes that re-rating triggers of volume growth and operating leverage are intact, and privatization, if it happens, is an additional upside. So their target of 870 is without privatization. Antique too spoke about how strong growth drivers seem to be in place for CONCOR. So do watch out for CONCOR today. Might have a lag up. APL Apollo Tubes is the other one. A very expensive stock, I think, but Motilal Oswal's note is interesting. They're initiating coverage with a target price of 2065, obviously a buy rating. The current price is about 1600. They believe that the diversified product portfolio and pan-India presence helps in mitigating concentration risk. The higher sweating of assets, because the current capacity utilization is only 63%, will lead to kicking in of operating leverage and better profitability. They estimate 20 and 35% revenue and PAT CAGR from FY21 to 24 respectively, and they value the stock at about 35 times FY23 or September 23 EPS. So they believe 2000 is in sight. Do watch out for APL Apollo Tubes in the session today as well. That's it, viewers, from my end. Thanks so much for tuning into the trade setup today. To all of you, have a profitable day ahead. From Virat, me, and everybody who put this piece together. Thanks for watching.